So Tesla stock has been making a strong rally in the last few trading sessions, and when we take a look into the overall Nasdaq index ETF QQQ, we see a similar pattern where there is a robust uptrend in the last few trading sessions. Now, it's very notable to mention that the overall Nasdaq is very much more tech heavy. In fact, if we take a look into the top 10 holdings of the Nasdaq index ETF, we see that over 9 of the 10 holdings are all tech companies. And so we're seeing tech highlighted in the red circle doing a strong move, just like we saw after the pandemic crash. We saw a massive rally. However, one of the things that we want to take note of is that the economic climate has not really changed, and in fact is actually getting worse. Now, about a month ago, Elon Musk made a tweet saying economic enema en route. Now, this tweet really aligns with some of the things that Elon Musk has said in the past. See, in the past, he said that, the fundamentals for Tesla are very strong and Tesla's doing very well. However, there are things that are out of the control of Tesla, and that is the economic environment. And he himself, Elon Musk, has said that, there's possibly some pain coming in the future as we may enter into a mini recession. Now, something that is concerning that we have to pay attention to is the fact that interest rates on credit cards have surpassed an astonishing 20%, making the highest rates observed since 1995. And along with that, interest rates on new cars are still tricking upwards. And guys, this data is directly from the Federal Reserve website. And so the purpose of this video is to really inform you guys that although everything has been looking very well for Tesla and their overall tech sector, we're going to want to go ahead and walk a little bit more cautiously as we enter into the next few trading sessions.
It's happening.
Particularly, we want to pay attention to Tesla at this current price range. Now, in previous videos, I highlighted that Tesla has been trading in between this range, and we want to be a little bit more careful as we get closer to the 216 level, simply because there's a lot of volume by price. Now, this is different from traditional volume by time. See, when there's a lot of volume by price, that means that there's a lot of trading being exchanged between the bid and the ask. And so this creates, areas where there's consolidation, it creates supports and resistances. And if we examine and look more closely, we see that on the 5-minute view, Tesla did get rejected by this area, an area that was a previous resistance in the past and a support in the past before it became a resistance. Now, if you guys are familiar with the channel, then you guys know that I don't pay too much attention to what's going on the charts. And in fact, I look at multiple data points, right? Because if you only pay attention to, charts and numbers and what's going on in the price action, well, that just shows that you don't have a lot of market depth, because there's so many different variables that contribute to a price of a stock going up and down. And so one of the things I've highlighted in this video is that, economically, things are still not looking good. Yeah, we've had a rally. Yeah, things are looking good. But on a technical aspect, we have to pay attention to Tesla, what it's doing now, especially since we know that economic conditions have not gotten better and in fact have gotten worse. Now, looking at some catalyst news, we saw that Volkswagen is unveiling a new electric model that is a classic of one of their older vehicles. Now, Elon Musk himself has said in the past a multitude of different times that it really doesn't matter what these other competitors are doing when they release their new prototypes or they unveil a new model, because at the end of the day, the real question is, can you really scale this into production and make it profitable? So I do agree with Elon Musk in that sense. However, one thing that we have to understand is that every time these other competitors release a new model, well, Wall Street, who consistently gets, things messed up a lot of times, especially with Tesla, believes, hey, well, this could be a potential threat for Tesla. And so this news, is just small news. It's not going to affect the stock of Tesla that heavily, but it's something that's, pretty notable. And so we're seeing a lot more models being released by the competitors. But again, I'm more on the Elon side that, hey, yeah, they could be releasing as many prototypes and as many models as they want, but is this really going to be profitable and be scalable, right? But we have to understand that a lot of people that see these headlines, right, they believe, well, oh man, well, Tesla's just going to fall down because now there's more cars that are competitors and they have their, legacy cars now turning into EV vehicles. And so this is just bad news for Tesla. I do want to, remind you guys that, again, this is really not anything, right? This is a nothing burger, right? But I do want to highlight that this could potentially impact the overall price of Tesla in a minuscule amount, right? In a very short term time frame. However, one of the reasons why I'm still very bullish on Tesla in the long term, right, is simply because of the fundamentals of Tesla's business, right? Tesla has something called pricing power, and I say this a copious amount of times on my channel, so if you're not subscribed, consider subscribing and hitting that, subscribe button, right? Also maybe hit that bell so you get notified every time there's a new video. But I've said this so many times that, Tesla has pricing power. We've heard from competitors like Ford, from their CEOs saying, hey, we may not be able to price our cars like Tesla is able to do till 2030, right? So they're like years behind Tesla. And on top of that, they're behind on Tesla with the technology as well. We know that FSD is so much more advanced than all the other competitors combined, and right? And so this puts Tesla at a huge advantage where not only do they have pricing power with their vehicles, but they could also scale up the bottom line because of software, something else that all these competitors don't have currently. And so when we see news like this, which was tweeted by Sawyer and retweeted by Elon, saying Tesla says all new Model 3 vehicles in the US now qualify for the full $7,500 EV tax credit, meaning the new Model 3 now starts at $32,740 with incentives in some states. You can get it for under $30,000. And so this is what I'm saying. The pricing power that Tesla has is very strong. And so, as we go into maybe this economic downturn, right? As economic conditions are not getting better, right? We're seeing consumer demand is getting weaker, right? Yeah, this is bad for Tesla in the short term. Elon Musk has addressed this himself, saying, hey, there's nothing we can do about that. But although things in the short term may, be a little bit bearish, right? It's not sustainable to continue going up in this direction, just up and away, right? One of the things is that, who's going to survive, right? Because that's the real question. Every time there's a major recession, the companies that actually survive are the ones who thrive after the recession is over. Now, let me just frame it like this. If Tesla is at an advantage in the EV space with all the other legacy automakers, and even the other just pure EV makers like Lucid and Nikola and all these other fraud EV companies, right? Let's just say it like this. If Tesla has an advantage in the EV space and an economic recession comes about, right? Obviously, these things move slowly. It doesn't happen overnight, right? Everyone thinks a crash just happens immediately, right? It progresses. But when it does happen, and we have Tesla surviving, right? Because they have pricing power. So although consumer demand may get weaker and weaker and weaker, Tesla looks more appealing because of the fact that they have this pricing power. Well, what's going to happen when the economy actually shifts? Because the market is very cyclical, right? We have bearish times, we have bullish times, we have recessions, we have, times where things are all, everything's looking great. Well, what's going to happen where everything's looking great? Well, Tesla is going to thrive. And so that's why as Tesla may fall down in the next few trading sessions, I'm going to wait to buy Tesla at the dip and add more to my long-term portfolio, right? I have exposure to Tesla in my long-term portfolio. Now, my short-term trading account, yeah, if Tesla falls down, I'm probably going to be shorting it, may get puts on it. And I know every time I say this, people get upset. I get comments, I get emails of people saying, why are you shorting Tesla? You hate Tesla, you must hate America. And that's not the case at all. Obviously, I have exposure to Tesla in my long-term portfolio. And if I'm shorting Tesla in the short term, it's really just hedging because my long-term portfolio is obviously going down. But obviously, I'm making profits as Tesla goes down. And then when it does go down, I buy more in my long-term portfolio. So obviously, there's a little system I have here. I hope it's not too complex. I think everyone should, invest long term. I don't recommend trading in the short term for everyone, as it's something that you have to be more attentive to, where you have to pay attention to everything that's going on, literally, and be active in the market. Versus long term, you could be very passive. And so if you're someone who's invested in Tesla in the long term, I would not even worry about Tesla falling down, about the tech sector being very foamy and kind of bubbling up at the top. I honestly wouldn't worry, because guess what? When things fall down, time in the market oftentimes beats timing the market, right? It's very difficult to time the market, right? Although it is profitable, there have been traders and multiple hedge fund managers who have been consistently profitable. There's very few, because obviously a lot of people try to time the market, they lose and they give up, right? They're not persistent, and they're not, they oftentimes lack a lot of market depth as well, right? They're only looking at charts and numbers, and so if you see anyone on YouTube just kind of talking about what's going on with the charts, and they're not talking about anything else like the fundamentals of the company or the macroeconomic environment, or looking at monetary policies, or looking at other data points, yeah, that just tells you that they're very inexperienced, because, technical analysis, looking at the charts, very simple, very easy to do. Anyone could do that. And that's why you see a lot of retail traders pick this up, right? And they just go on YouTube and talk about, oh, well, this level fell down, right? Well, there's reasons why levels go up and go down, right? There's reasons why stock breaks a level. But with that being said, I want to highlight something else that's a little bit concerning, right? Now, we all heard about the debt ceiling news in previous videos. I said there's a 99% chance that they're just going to raise the debt ceiling. It is a possibility that we might have, defaulted, but, it was very likely that we weren't, and we were just going to raise the debt ceiling. Now, here's the issue. Every time you raise the debt ceiling, what ends up happening? Well, the government has to raise more debt, so they issue out more bonds, right? They issue out more treasuries, right? And so what happens when they issue out all these, treasury notes and bills and bonds? Well, guess what? Investors end up buying them. And with rates this high, it's going to seem very attractive for investors to buy all these, treasuries. And so what that means is we're going to see a lot of liquidity exit the market. Why? Because, investors, institutions, they're going to take their money out of the market, right? And, place it into something that's more secure, like treasuries, right? And so what that means is, again, there's going to be a lack of liquidity in the market. And when there's a lack of liquidity, there's more volatility, right? Because now there's, just a bigger spread between the bid and the ask, right? Because obviously there's less people participating in the market. And so that means when there's a lot of, volatility and less liquidity, right? Obviously, when prices go down, they could jump down faster. And when prices go up, they could jump up faster. Not to mention, we're also entering into the summer months where we already have a lack of liquidity. So we may actually see Tesla continue going up higher, faster, or fall down below faster. So this is something that we want to be cautious of. Now, again, I hope you guys enjoyed this video. I'm not trying to, spread any fear when it comes to Tesla. Again, I'm a long-term Tesla bull, but there's some, things that are out there that are a little bit concerning that we want to be cautious about. Now, with that being said, guys, also make sure to check out the links in the description below, because the first link is going to be a link for the Push a Profit program, where you have access to the private group. You also have access to my daily lessons, or my daily briefings, and the lesson library, so make sure to check that out. There's also a Father's Day coupon code, so definitely take advantage of that before the coupon code expires. And with that being said, guys, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care.